We will talk about everything related to finances, the proper organization of the financial aspect of the business. I will talk about what I do every day. I very much want to listen to the participants. Yes, perhaps some questions, hot topics. Yes, points that need to be discussed. Well, and accordingly, we will cover the first course. The first lesson is about the role and place of a chief financial officer or financial director in modern conditions. Okay, let's get started. I think if someone joins, they will understand without any problem. We will have a presentation later, and then we will have a working file, homework and test, and all these materials will be available in the personal account. Let's go. So, what is our course about? The course is part of Mike Pritula Academy. The course is called Finance Director or CFO. Mikhail and I decided it would be good to create a course that stands out from the many others on the market. One that does not talk about theory, but rather a more practical, the aspect that is directly needed in the process of conducting business, in the process of making certain decisions, business decisions, management decisions, which directly involve people who work in the finance department, in accounting, or in any other department related to the consumption of financial information. And we will probably talk about this in every lesson over the course of 20 lessons. We will do our homework on this. Yes, create cases, write business plans, calculate some indicators, and all of this very practical, very applicable to what is directly related to running a business. My name is Konstantin Yarokin. Very nice to be with you today. I would like to start with a brief introduction as a warm-up about the course structure, the training structure, and the approaches used. We have a website located on the Academy platform. You can visit it to familiarize yourself with the course structure, the list of lessons, and the key points we will cover in each lesson. Accordingly, all this with the dates of the lessons, with the time, so that it's easy for a person to navigate, to know where we are, which lessons have been completed, which are upcoming, and what we will talk about today and in the near. The course program is available both on the website and here in the presentation. I already mentioned that we have 20 sessions, each covering a practical aspect of conducting business. Today we are talking about the role of the chief financial officer, the role of finance in the company, and the position of the finance department. We will a lot of insights, which I will share with you, that happened to me in practice. And in each lesson, I will try to tell those stories that happened to me, that I experienced firsthand. I wanted to say skin, almost but I won't say it. Yes, from my own experience. And accordingly, each of these lessons is a combination of a presentation, which contains the main information as an introductory theoretical part, basic level. Then we will have a practical session which will cover the topic we're talking about, but already in a more applied form, with calculations of some financial indicators, with drawing up some plans, with setting some goals, with making decisions, financial modeling, situations which is more available. We'll show what materials, how we can use the acquired knowledge, how they fit into modern business models, how applicable they are to your business cases, to your business models. Maybe discuss some alternatives. There will be some various options for solving these issues. Accordingly, the practical lesson leads to the fact that after each lesson, all listeners receive a homework which also consists of several parts. The first part is a small and simple test. A few questions dedicated to the topic of the lesson that was conducted
in the form of selecting the correct answers.
In addition, this is the calculation part, which will be that based on the calculations we covered or made in the lesson, everyone will have to build their own calculations for the model they will. For the financial model, they will fill out from lesson to lesson. Each of us will have a file that we will update with calculations on each topic we cover. And in the end, this file will be something you could call a business plan, a financial model, or projected indicators. But in any case, this file will cover absolutely all aspects: calculation of all financial indicators, preparation of main reporting forms, development of a motivation system, and calculation of financial metrics for business efficiency, and everything, the points that I consider important, which we need to control, calculate, compare with the planned indicators we set for ourselves, and draw conclusions based on this information about the effectiveness or ineffectiveness of the decisions we made when making forecasts, plans, strategy. What result do we want to achieve from the business? From a financial perspective, all results are converted into some monetary indicators. The language, the financial language of business, is money. Everything that we can express in monetary terms is the object of our work, my work, the work of the finance department, the work of the finance director, or you can call it a chief delivery officer. Accordingly, this is a bit about the course structure. And in every session, I would like to have an interactive session with questions and answers, communication with the listener, discussing some comments on the course, topics we can debate, communicate, and discuss and take into account in the process of conducting our course. The program of today's session is a description of the role of the Chief Financial Officer in the company, the organizational structure of the financial department. I will immediately note that this is not quite an organizational structure from the point of view of hierarchy. Yes, it is a more process-oriented model, and we will discuss it in more detail. I would like to focus on this. Yes, the model of interaction with the Chief Executive Officer or with the person who provides leadership. The company manages the business, makes management decisions. Interaction with the board of directors. The board of directors is a separate collegial body, which is created and used rather for controlling the CEO. We will talk about this. We will discuss how the finance department and the CFO interact both with the executive director and with the board of directors or board. It can be any name. And working with auditors. Auditors are people who assess the quality of accounting, the quality of the work of the finance department, who provide an evaluation, the correctness of report preparation, and the transparency of business conduct. All of this is today's lesson plan. We will definitely talk about all of this. And I would really like to hear your questions. If you have questions during the lesson, you can write them in the chat. I can see it. And when we have the question and answer session, we will definitely return to these questions, discuss this, talk in detail, possibly share opinions, and have a little discussion. So don't hesitate. Let's make this interactive. Questions are always welcome. Questions mean that people are interested, it's relevant to them, and we have something to talk about. This is a little about me. I am the Chief Financial Officer of Intellas. I have been working in finance for about 10 years. In finance and accounting, probably 20 years. I have some experience conducting training sessions, events, training, writing articles, yes, even dissertations. So I will share what I know. I really want to hear feedback from you, and accordingly, something new together with you. Yes. Homework assignments. I talked about what makes up homework assignments. And the Academy's platform provides an assessment of the students' work quality, right? It is evaluated in points. The maximum number of points is 100. If a student scores the 80 or more points during the course and passes all the tests, they receive a diploma. If the score does not reach 80, but the tests are passed, then the student receives a certificate. Completion of homework is time limited. This disciplines people, right? And 2 weeks are given to complete the assigned task. Actually, such a program allows assessing the effectiveness of the material delivered to the student and its understanding, assimilation of this material. Okay, let's move directly to our lesson. So that if anything, put some marks that you can hear me and I'm not disappearing. If anyone suddenly doesn't have sound or there are some issues with the image, write to us and we will respond. Okay, yeah, great. Who is the Chief Financial Officer? Just someone. I think everyone watched the Game of Thrones. Yes, there was a role like that. Master of Coin. The person who held the treasury, who was responsible for all the financial matters of the kingdom. CFO as the master of coin for each specific business. Accordingly, we, in the role of a financial officer, financial director, or head of the finance department, are responsible for all decisions.
$10,000, which can be converted into monetary equivalent.
Will we have enough money to pay salaries? How successfully have we met the sales plan? Can we hire new people? Can we fund a new investment project or existing ones? How much money will come into our account next week, in a month? Where will we spend this money? What inventory, at what cost do we need to maintain in the retail network? How do we need to build the production process so as not to run out of money in the middle of producing a large batch of goods? How can we fund long-term projects such as purchasing real estate, building a new workshop, buying a large batch of goods, or purchasing raw materials at wholesale prices but in large quantities? All these questions are translated, turned into financial questions, and fall under the responsibility of the financial director. Accordingly, on the left side of the slide, we see the responsibility of the finance department and the person who leads it personally. Planning and budgeting come first. I think you all have heard such words. We will have separate lessons dedicated to planning and budgeting. We will return to this. We will break down this topic thoroughly. For now, it is enough to understand that planning and budgeting in monetary terms, any financial indicators we set as targets and want to achieve, are the responsibility of the financial officer. We provide all these presentations. They will be available. Besides that, the lessons are being recorded. You will be able to watch the video recording, and plus all these lessons, as I already mentioned, are then converted into an Excel file with calculations and a description of all the important aspects of all our topics. Therefore, the material will be available in any of these formats. Just look at the presentation file, review the video lesson, analyze the calculation file, see how the formulas work, where the indicators come from which Excel cells. All this will be available. Well, and accordingly, to create your own file in the form of homework. in the form of developing your own project. All of this will also be available in the personal account. Moving on. The next responsibility of the CFO is management reporting. Management reporting it's not what first comes to mind. It's not some incomprehensible numbers in unclear places, in unclear rows with a bunch of different information. No. In this case, management reporting is what people need to make correct management decisions. For this, the financial director must understand the need for information provision for each of the stakeholders, for each consumer of such financial information. Accordingly, we must clearly understand the system of our business, the business model, who manages it, at what level they manage our business, who makes managerial decisions, and what information will be useful for them to make the right decisions. This could be actual information, it could be planned information, it could be information about external factors that affect our business, right? It can be any other financial indicators that are relevant, necessary, and possess certain qualities. The qualities we need for financial information, there are three main ones. Reliability. The financial information we provide to all our consumers must be truthful, reliable, and accurate. This is timeliness, because unlike accounting, we cannot wait 40 days or 60 days to close reports after everything has happened. Our business operates every second, every day, every minute. We need current data that is timely about what is happening now. We sometimes need data about what might happen in the future. Of course, we need data about what happened in past periods, but the timeliness of information is a very important aspect, and we will talk about this. Our financial department, the financial side of the business, must be based on the idea that information should be online. Currently, any business has a competitive advantage if its information is available immediately after an event occurs. Therefore, timeliness of information is the second factor. The third factor is completeness of information. Our information may be accurate, our information may be timely, but if it is not complete, we risk not providing all the necessary information for the right decision. If we forget to include information about a certain department, a certain warehouse, a certain workshop in the general summary of financial information, unfortunately, our information will be incomplete, and based on it, one might make a wrong decision. Therefore, it is very important. But truthfulness, timeliness, and completeness. These are the three factors we need to understand and remember when building a management reporting system. Of course, we will discuss this separately, very thoroughly, very in detail, but now we understand that this all falls under the responsibility of the financial director. The third point is accounting. But accounting is a separate, large scope of work done in every business. Yes, every business is required to maintain accounting. In every business, there is an accounting department, whether it is a small company trading in the market, yes, in retail, or a huge international corporation, each has an accounting department. Accounting can be transparent, under the table, off the books, double, or anything else, but it exists. Accounting is conducted according to rules set by specific external standards or regulations. Rules, a code of rules, which is written so that each company can be compared, each company can be checked, auditors handle this, regulatory bodies handle this, external tax inspection, statistics, any funds that have grounds, and so the data from accounting records, as a rule, forms the basis for such audits. Accounting, as one of my directors used to say, is posthumous accounting. This means it's about everything that happened in the past. Sometimes we hear that financial reports can be prepared with significant delay in real time. For example, according to tax reporting rules, we can compile annual reports over 40 or 60 days after it has been in fact closed. This means that we cannot, or very rarely can, use accounting data for making management decisions. But we already know that for making management decisions, we use management reporting, which is compiled a bit according to different rules and may differ from accounting. And accounting is conducted by the accounting department according to the standards of such accounting. In this same context, tax accounting and all other types of accounting needed for external users are conducted. More briefly, we can say that management reporting, internal consumers of our financial information. Accounting is for external consumers of our information. All regulatory bodies, banks, auditors, and any others. Stakeholders who want to obtain data about our business. This is the responsibility of the accounting department. Next, the responsibility of the financial director, the finance department, is risk management. Risk management is a very interesting, I would say, innovative field. Very often in domestic businesses, we did not have a risk management department. We did not consider any factors that could impact our business, either external or internal. We did not incorporate risk factors into the calculation of our projected planned indicators, whereas the Western culture of financial management always included risk management, always included a risk matrix, selecting those risks that are material, those that have the greatest significance for the business, and took this into account in financial calculations. Risk management is accordingly one of the important topics of the financial director's responsibility. It needs to be known and applied where necessary. Typically, it is applied in planning, budgeting, management reporting, and setting strategic goals. And there it is useful to use a risk management procedure. Working with banks and financial institutions, there is a golden rule that it is better to build a business with other people's money. This means that the financial director must be concerned about where we will get this borrowed money from, how we will attract borrowed resources, how we will repay them, and what interest rate is acceptable for us to pay. As a rule, borrowed funds, whether it's a bank loan or loans from other owners, cost money. Money costs, using money, other people's money costs money. Yeah, these are interest fees for using a loan, compensation to the lender, and any other methods. Therefore, working with banks and banking institutions is precisely about understanding the credit market, understanding the possibility of attracting funds in one form or another, in which forms we will also discuss this in detail. This is an understanding of what rate we are willing to pay, what rate for using borrowed money we are planning for ourselves. We forecast and include in the calculation of our financial indicators, planned financial indicators. Accordingly, in addition to making a plan, we need to contact the bank or monitor the banking market in general, choose the most suitable option for us, enter into a credit agreement, receive the funds, and spend them for the intended purpose. This is very important. Sometimes people, after receiving a loan, lose their head and make rash decisions. This was my experience. I can tell many stories on this topic. However, when we work with banks and financial institutions, we plan the acquisition of resources, monitor the use of these resources, and make sure to control the return of these resources. Business is an integrated approach to working with banks and financial institutions for a CFO. Stable business. Cash management. Naturally, this is a daily routine that should any financial director should handle. How much money do we have?
Where do we plan to spend it? How much money will we receive? How much money do we plan to spend in the future? We must answer all these questions online. We must have an answer to all these questions at any moment, at any point of conducting business. How much money did we spend in the past? How effectively did we spend this money? And how does the amount of money received and spent compare with the limits we set for ourselves? A huge piece of work is very important, and we will talk about it. We will talk about it a lot because in principle, cash management is one of the main functions. Effective cash management stabilizes the business, giving it the ability to develop productively. Conversely, the absence of funds probably ruined. Most businesses that ceased to exist did so because of this. The main reason for failures in business is a lack of money at some stage.
Undergoing inspections by regulatory bodies.
The financial department should be a reliable shield for the business in terms of passing any inspections that check financial indicators, reports, calculation of indicators, provision of any requests that the financial authorities demand. All of this should go through the financial department. When I say financial department, I mean it must include accounting, and if it's a large company, the internal audit department and possibly control. This involves close collaboration with lawyers and attorneys who should certainly accompany such inspections. Possibly still, it's close work with external auditors if we have them, which allows for a comprehensive approach to solving the issue of protecting the business from regulatory agencies. Yes, I call it protecting the business. For me, regulatory agencies are some of, racketeers, which they just can lead a business to bankruptcy if it isn't founded on high penalties for violating tax laws, for improper business conduct, for engaging in illegal activities. These are all risks that we must consider and be maximally protected from. Therefore, yes, undergoing inspections by regulatory authorities is an important function and a key responsibility of the financial director. In the list, there are audit and compliance. Fashionable foreign words that mean that at a certain stage of business, the bigger the business, the more attractive it is from the investor's viewpoint, from the shareholder's viewpoint, in terms of entering stock exchanges, entering the larger business world, the transparent world of business. And at this stage, external audits of the correctness of accounting and business transparency become necessary, and passing such audits is impossible without the coordinated efforts of the finance department and accounting department, without providing all types of reporting, without disclosing all nuances of accounting.
It is impossible to pass an audit and
to receive a positive auditor's report. Compliance is a very trendy word. It means adherence to internal procedures. This is a department or person or unit that ensures we do everything according to the procedures we developed for ourselves or external standards, such as accounting standards or codes of conduct that we have recognized as ones we would like to follow and adhere to. If any of you have worked in banks, then you probably know that almost every bank has a compliance department, a department for adherence to procedures, banking procedures. Why is this relevant for a bank? Because a bank is a highly regulated business. It has the central bank, the national bank, the top level bank, which issues its directives, which issues its rules of the game. It has a bunch of other restrictions. It is required to follow both external and internal procedures. The compliance function, the function of following such procedures, is a very important issue for the bank. Moreover, the bank requires its clients to comply with these procedures as well, because these requirements are the rules by which the banking business operates. For non-banking sector businesses, compliance is not very relevant yet, but the larger the business becomes, the more a greater priority for necessity arises in such a department, in the compliance department, which ensures adherence to rules, procedures, and policies developed for the business. Therefore, I believe that this is also the responsibility of the Chief Financial Officer. Although there may be several opinions here, and sometimes this department is part of the legal department, sometimes it is under internal control, which is separate from the financial function, but in each business, this is possible according to its own rules, as they agree. In addition to responsibilities, it is essential for the Chief Financial Officer to have rights. Without rights, they cannot build the right system. If the Chief Financial Officer says that they only have some responsible obligations but no rights, that is a bad Chief Financial Officer, a bad top-level manager, or a person who can make some decisions. Therefore, when dealing with the financial perspective of the business, building the financial model of running the business, we must have authority, we must have rights. The English word authority, yes, in order to build what we need, to establish processes, organize people, to launch the work of the financial department, and ensure, as I have already mentioned, that all consumers of financial information have correct, reliable, and complete information. In summary, the rights of the CFO, building a business financial model. It is necessary to give the finance director the right to make decisions on how we will conduct business from a financial standpoint, how the cash flows will be organized, what control points we should lay the foundation in business, how we will link planned and actual indicators, how much and where and at what stage we will pay taxes, how we will undergo inspection. We will have a separate session, of course. We will build a financial model of the business, more than one, in fact. And we will use this right, but such a right to make such decisions, create a financial model and change this model. Sometimes changing a model is much harder than building a new one, but we should have this right by default. Development and implementation of accounting policies. We need to establish roles for ourselves, for our business, on how we will perform accounting. If we want to live in a stable in the business world, we need such policies, probably not only financial ones, but any others that we will adhere to. And if we change them, then probably in agreement with an understanding of why we are doing it. We do. This by no means implies excessive bureaucracy. It simply means the rules of the game that we agreed to play by with all the other participants with whom we do business. And it is very important that we write down these rules before we start doing anything. That is why I am talking about the need to develop a budgetary and accounting policy, a financial policy by which we will conduct our business, and to familiarize with, inform all other people who are interested in this, who may ask, do we have rules of the game? Do we have a policy? And what will we do if we need to make some financial decisions? A part of the accounting policy can be tax policy and the risks we bear. Accordingly, in the financial model of the business, tax policy plays a large important role. What do we do with taxes? Do we pay them or not? If we do not pay, then how? Do we optimize or avoid? Or do we move our business to a tax-free area? By the way, non-payment, the absence of paying taxes, does not mean the business is illegal. I will show examples of when we can legally not pay taxes and at the same time not violate any rules, anyone's rules when conducting business. It's possible. Understanding how we can build a tax model for the business, what risks and what expenses arise in the process is quite important, so that later
correctly implement. Decision-making regarding the management of funds. If we have the responsibility for managing funds, we should have the right to limit or reject expenses that we consider ineffective, impractical, or not in accordance with our policy, or those that exceed the limits we have set for ourselves.
The next point is very important. Delegation of financial responsibility. Delegation of financial responsibility means granting financial management functions to other business participants, other managers involved in the business. A separate, very interesting topic, believe me. Not all financial directors use this right and carry the entire burden of responsibility, sometimes even answering for others' mistakes. Therefore, delegating financial responsibility, building the right financial responsibility model is very important so that everyone, stakeholders, all consumers of financial information, all people who make management decisions based on financial information, were united in financial responsibility. The right to veto management decisions of other stakeholders. The CFO should have a magic button that stops any incorrect financial decision, at least until confirm agreement of this decision at the top level. As a rule, this is the level of the CEO. Therefore, there must be a veto power on management decisions. There must be a magic button, and we will consider cases when we need to press such a button. Influence on strategic plans and objectives. A strategic plan, budget, or company activity forecast cannot be developed without the participation of the CFO. This means that either the business model is incorrect and the financial model of conducting business does not provide for the decision making by the chief financial officer at this stage, or the chief financial officer is weak and cannot lobby for their participation in such an important moment. As a rule, a CFO must play a key role in developing a financial strategic plan, setting financial tasks, and developing certain metrics that we aim to achieve in monetary terms. I remind you that when we talk about finance, it's all about the monetary equivalent of conducting business. It's all about money. Next slide. Do not be alarmed. There are many separate components here, but this is just an example of what a process model of the financial unit, financial department might include. In fact, many of these components can be combined, and in large businesses, these components can be divided into separate SEGU. I am moving away from the standard approach of organizing the finance department by a hierarchical structure. At the top is the director, below are subordinates, separate accounting, separate finance department, separate planning department. I consider this an outdated approach to organizing the finance department and propose a process approach. The processes involve choosing the functions we want to perform within the financial department. We build processes in the middle of within our department. We connect these processes with people from other departments with the roles that are performed by other subdivisions, and thereby ensure the flow of information. And documents within our department and the exchange of this information with other departments. If you look at the components, they are all about the functions performed by the finance department. Planning and objectives. We talked about the fact that in the process of financial planning, in the process of setting financial goals, we definitely need the involvement of the finance department, the chief financial officer, or the people who handle this. We must have this internally. This process must go through the financial division, salaries and compensations. Naturally, we must calculate people's salaries, other types of compensations, and this process naturally should exist
in the financial department of accounting or in a special division that handles payroll, calculation, accruals, payments, or within the financial department. This is our internal workings.
Analysis of key performance indicators. I think all of us have heard about financial KPI. And accordingly, we must analyze how well we are fulfilling the plans we set for ourselves. Accordingly, this is one of the components related to the financial division. Cash flow management, management of funds. We have already talked about this.
Yes, we need to manage, we need to control, to calculate the correct cash flow so that we understand that we won't run out of money at the most crucial moment.
Budgeting and controlling are components that are related to
based on the established plans. We will talk about the budgeting and controlling in separate lessons in great detail. For now, we are saying that this is an integral part of the work and process of the financial department.
Working with investments. We discussed that we need to understand that investments are separate financial contributions, usually large ones, that must be accounted for separately and require specific management decisions. And it is very good to have a separate division within the structure of our financial department that handles investments. The process of invoicing or billing our clients is an important part of our business. It is communication with our clients, with customers. We need to close this as quickly as possible to receive money from them. And naturally, this is an important process within the finance department. Working with debts is no less important. Besides invoicing, we need to receive payments on time, as agreed with our clients. Therefore, if someone does not pay us, if someone delays payment on invoices, we need to work with them promptly, understanding the procedure we follow for collecting our debts from our debtors. Separate division for working with debts. Budgeting and controlling, I already mentioned. These are separate executions of the plan. Operational accounting or management accounting, providing necessary information to internal stakeholders. An important process of the financial division must be ensured within our financial department so that online we have accurate, complete, and timely information about everything happening in the business, about everything. I mean, even if some of our business is not processed in accounting or is not reflected in accounting entries as it should be, in management accounting, we see the real information. If somewhere some sales are made in cash or in some other way, in operational accounting, we still have to account for these operations promptly and provide truthful information about absolutely everything that is happening within our business. My favorite example is a bribe that we, for some reason, paid to a tax inspector. In accounting, it will never be recorded as expenses for a tax audit, but in operational accounting, it must be shown as expenses related to the tax audit. This is the difference between accounting and operational accounting. The accounting and taxes ensure compliance with the selected tax model, full payment of all assessed taxes, timely reporting, and correct handling of tax audits with minimal losses and expenses, both official and unofficial. Control and audit is the process and division responsible for undergoing an audit, obtaining the audit report, and ensuring there are no violations, abuses, or theft within our business. Sometimes these are separate units outside the financial department, but everything related to monetary funds, everything that can be converted into a monetary equivalent, falls under the responsibility of the financial unit. Therefore, control and audit. And yes, very often we must work on creating a control system
internal control, which will minimize abuses, losses, inefficient use of funds, theft, and other such cases. And risk assessment. Risk management, which we have already talked about, expressed in financial equivalent in monetary terms, which needs to be considered when calculating our financial indicators. I will say again that these components, that these processes are incomplete. They can be increased a smaller number of components, or on the contrary, be more detailed, depending on the business model, the size of the business, and how the financial director deems it necessary to structure finance processes in the finance department. How the financial director interacts with the executive director, with the general director, with the manager, yes, with the firm's top management. In this case, I have highlighted 4 blocks where we can outline how a financial director can support the financial executive director, executive officer. In this case, we will talk about each of these 4 components separately. But for now, let's go over them generally. In the responsibilities of the general director or executive director is the creation of the mission, vision, and values of the business. In this case, all these metrics must align with the business's capabilities. We must dream big, but start with what we have and understand how financially we can reach what will be embedded in the mission of our business. We will talk about this in detail. We will turn the mission, the vision of the business into financial plans.
I will show how it happens in practice.
When developing a business strategy, we must definitely engage in the financial planning stage during the calculation of financial indicators to understand how realistically and within what time frame we can achieve such planned strategic goals. When setting goals, we use financial tools. Budget development, building financial plans, creating financial models. We will do all this, go through all this, and see how plans, strategic plans within missions and visions turn into specific financial calculations that can be achieved. When building an operational management model, finances should provide consumers at all levels with analytical indicators, key performance indicators, and management reporting that we have already discussed. These are important components that we need to calculate, demonstrate, provide, comment on, and make some conclusions about. I mentioned that the board of directors is a somewhat different body which does not directly participate in operational management or make daily decisions. Nevertheless, it controls the correctness of business conduct and adherence to certain general strategic policies, achieving high-level goals. On the slide, we see the blocks to focus on in order to interact correctly and efficiently with the board of directors. These are policies and procedures. This is the compliance I mentioned earlier. These are regulated reports that must be correctly completed and timely submitted to all regulatory bodies. This includes passing audits, if required by the business model. This involves support for mergers and acquisitions. This will be our separate topic. There is experience, yes, there is something to share. How mergers and acquisitions take place. This is a separate area of activity for the financial director and strategic. The area of responsibility is probably the board of directors. In the distribution of profits, should we pay dividends? What decisions have been made by the board of founders or the board of shareholders? In what time frame should they be implemented? And can we afford such a profit distribution in principle? All this falls under the responsibility of the financial director. In relation to the board,
We will return to this. We will talk about this in the next sessions. In principle, at a high level for now, it is very important to remember that in the course of their activities, a financial director typically makes mistakes. After all, only those who do nothing make no mistakes. In this case, I have grouped my experience. Yes, actually, all the mistakes listed here are mistakes I made during my work. And yes, sometimes it is quite painful. Providing incomplete, inaccurate, or untimely information leads to incorrect managerial decisions. And the blame for this will fall on the financial director. Data that is useless for decision making when the financial director does not understand who needs what, he often provides data that is either useless without a recipient, unclear to anyone, and useless. Complex, unreadable reports are generally a favorite trick of financial directors, showing a balance with some numbers on the left side and some numbers on the right side. What are they about? What are they for? And how can they be used? Nobody understands. But the chief financial officer is happy with what he's done. It's a typical mistake. Misunderstanding who the real consumer of financial information is. We already talked about how, in this case, the data will be useless. At least. No decisions will be made based on this data, and at most, this data could be used harmfully. Lack of systematization and consistency in providing information. Today we show one report, tomorrow we say that we changed some procedure and our report has changed. This inconsistency confuses people. It suggests that the financial director himself has a poor understanding of how and in what system he should process and provide this information.
Blind adherence to standards and practices without understanding the situation.
Very often, when we encounter situations where the financial director or the chief accountant says, we cannot do this. And then gives a bunch of excuses because the standards do not allow for this. Because I cannot reflect this in the accounting. Because the tax authorities will come and fine us. Wow, this is blind adherence to standards and practices. The correct response to such a situation is, we have risks that we might incur in the process of carrying out this operation. Or, I suggest conducting this operation in another way in order to avoid certain red zones, yes, to avoid some risks. And any standards and practices must be understood in terms of how they can be used and how they can be circumvented. This is the value of a financial director. Immersion in operational activities, lack of strategic thinking. When we talk about a C-level position, that is chief, then we need to understand that any chief officer in any business, any high-ranking, high-level decision maker, must understand that besides operational decisions, besides operational activities, there is a strategic aspect of conducting business, a strategic aspect of building models, a strategic aspect of development, a strategic aspect of decision making. Many financial directors get bogged down in operations. I am guilty of this myself, starting to do some, especially those who grew from the ground up. They know how to do it, but they can't delegate their functions. And as a result, instead of truly effective department management, they engage in micromanagement or handle operations themselves, replacing people who could perform such functions, conflict of interest when providing information to internal and external consumers. Very often, especially this, it clearly manifests in accounting when decisions are made in favor of taxation. Let's play it safe. We will pay more taxes. The business will suffer a little, but at least we will sleep peacefully. And there is a conflict of interest in this. You need to understand in which situations this conflict of interest arises and minimize it from the perspective of making effective decisions.
if we have a conflict of interest with the chief accountant, then the decision making should be taken away from them. If there is a conflict of interest at some other stage, we need to think about a model that will allow us to avoid such a conflict. The lack of self-development and continuous learning, I think this is relevant for any position in business, not just for a financial director, and poorly developed soft skills. The problem of financiers, the problem of accountants, inability to communicate, inability to express thoughts, unwillingness to talk about what they do, present their work results, can lead to the fact that someone among the key stakeholders, among the key consumers of financial information, will not receive that very information on which they will base their decision. It is very important to understand that soft skills are important. They are important in communication with the so-called peer-to-peer communication, with those equal in their positions, as well as within the department. You need to communicate with people who are in the field, with the finance department, with accounting, be able to communicate with subordinates, understand their problems in order to organize an effective financial system. Homework. Develop a matrix of financial functions. It sounds difficult, it sounds very daunting, but actually you just need to think about what idea your business has. If there is already a business, you can simply describe the business idea and list all the processes that you think relate to the financial department. That is, just list everything you believe the financial department should do for your business. Naturally, I will send you a sample, quite simple, by which you can create a financial functions matrix. The sample will be filled based on the components that were on the slide. Here is a specific case that we will review in each lesson. I have a suggestion. Yes, this is a description of a small startup that will be processing information, processing business information and providing this information to consumers who will be willing to pay money for it. Accordingly, based on this business idea, a matrix of financial functions will be developed. Right now, I want done. This is a fairly simple procedure, and I suggest you do it in your free time for your business idea. Next, we will fill this matrix. Next, we will develop this business idea and move from lesson to lesson on topics, filling in. We will update our file with this business idea, with new calculations and new tabs, in order to eventually have a finished business project. So, what was the most valuable today? Let me start with myself. We are moving to the communication block. I would like to say that for me, the most valuable thing was that you came to my lesson, and I was able to share some information about what we will be doing in the course, so that what I wanted to convey to you, yes, and in what form, and that we have started our course and will continue moving forward with it. And it is very valuable to me that we are following the predetermined plan. Yes, the course is flexible. The program allows any participant to join at any stage. They will have access to samples and all materials from previous lessons. Accordingly, the course is designed in such a way that you can take it online, as we are doing now, or join and watch all the lessons recorded and complete all the tasks later externally. And basically reach the same level that people who attended all the webinars will have. If anyone wants to say something, I will gladly listen. Comments, remarks, proposals, any desire. So Tatiana wrote in the chat,
Hello, colleague. Very nice to meet you. Yes, I have experience working in a holding. Yes, a group of companies. As a rule, nowadays, all businesses essentially work in groups. It's very rare to encounter a single legal entity within a business. Let's structure, let's figure it out. If there are any hot topics, I'd be happy to listen. You can even, based on a list of lessons, send in advance any questions you would like us to focus on in more detail, or any problem situations in your business, and we can concentrate a bit more on them. With pleasure. I'll read in here. Anyone else? Don't be shy. We are basically here to communicate. I will briefly stop screen sharing and switch to video conferencing mode. I see Mikhail, right?
Yes, hello, Mikhail.
Hello, very nice to meet you.
Get acquainted.
How do you find it?
In principle, interesting. I can briefly talk about myself.
Let's do it.
I am the director of a small company, an IT company with 10 to 15 people. Well, recently, we were usually working through sole proprietorship and hit the turnover limits, taxes. So I had to learn a bit about accounting. I took courses in accounting. We actually managed to slightly reformat the way we work. We started working through an LLC. And I became interested in this topic. And of course, I want to learn more. And I became interested in your advertisement on Facebook. I clicked in.
Do you have outsourcing or a product?
We have outstaffing and outsourcing.
Outstaffing and outsourcing. Well, I can share. Yes, we also have a small company with 1,600 people. Outsourcing and outstaffing. I can tell how it works on a large scale. In principle, I know quite a few examples of how small companies are now structured, starting from 10 people and going up to 100, 200, 300, and more. We can probably talk more specifically about IT.
Are you in Ukraine now?
Yes, in Ukraine, in Kyiv.
Well, accordingly, I probably know all these details and can share them. At the very least, warn about typical mistakes that are made or keep you updated on what will happen with us in the future. Although our future is still unclear, I always, when asked what will happen next year, I say, well, we'll see, right? For now, we live in the world we have. Accordingly, we will watch, we will communicate. I will be happy to help. If there are any specific questions, ask, we will consider them.
I would also like to hear about the topic of offshore companies, how all this works.
Well, yes, we'll have different jurisdictions, offshore, onshore, foreign jurisdictions. Actually now, well, the trend is like this. We can talk about offshore, but it's getting harder and harder to use them. No. And not even from the perspective of legislation or say tax rules, but more from the perspective of opening bank accounts and services in normal banks. Because when offshore jurisdictions try to open banks, that's where they actually face a trap. Fewer and fewer banks want to work with jurisdictions like Seychelles, Bermuda, and others, where there is no record keeping and no taxes are paid. But there are options. Yes, there are workable options. There are even low tax jurisdictions or jurisdictions with special tax conditions that allow, in principle, comparable to Ukrainian realities, paying around 5% of turnover and at the same time legally conducting business, but already in a European jurisdiction.
I'll tell you.
We'll show maybe, okay. Well, we already have 20% of turnover in cryptocurrency. That is also.
Nothing to worry about. Malta, in principle, is very actively promoting cryptocurrency. All of this is recorded in their accounts, absolutely legally, lawfully.
Moreover, they hold lots of conferences on how to structure this in terms of recognizing cryptocurrency. Now, therefore, in Ukraine, they still don't know what to do with this. But abroad, it is in principle a completely normal method.
A transaction, right? Just another account.
With everyone.
Attributes that a bank account or an account in any payment system has, right? Like PayPal. In Ukraine, they don't know what PayPal is. If you work through PayPal, you don't have to show anything to the tax authorities. They will never see it.
Abroad, it's not like that. It's abroad, it's just an alternative to a bank account. The same applies to cryptocurrencies.
And we can talk about this. All right, thank you. Here we also have Valentin.
Maybe Valentin isn't responding, but that's okay. Thank you very much for participating. I think the first lesson, thank you all for being here. Come again. Join in, invite friends if someone or those who are still doubting, hesitating, we will move forward. As promised, I will send you homework and a test based on the results of this lesson. And we will see.
Yes? Yes. The next lesson is in 2 days, on the 5th, as scheduled.
Yes, thank you.
That's all.
Увидимся.